Assist you sell way smarter.
Hello, everybody, and welcome back to another live Reno Sparks real estate market update, this time for December 2020. Now, a few housekeeping items before we move on to the actual content, and that is these numbers are for December, which means closings through the end of November. We'll have a year-end look back and a 2021 preview in the next couple weeks, so stay tuned for that. This is for the greater Reno Sparks area, including as far north as, say, Cold Springs, Stead, Golden Valley, Lemon Valley, etc. Out in Spanish Springs, Palomino Valley, as far south as Washoe Valley, East Lake, Pleasant Valley, Galena, Double Diamond, DeMonte, that whole corridor out there. And then, of course, out to the west, out to Verdi, State Line, and Mogul, Somerset, New Northwest, etc. So it does not include Fernley, Fallon, Carson City, Dayton, Minden, Gardnerville, etc. Just the greater Reno Sparks metro area. Now, the number that gets the most headlines, as you can see on the screen here, is the median sales price, which hit a record last month, and it remains unchanged for December through November at $455,000, and it's up a whopping 13.8% from last year, which was $400,000 at this time last year. Now, before we go on, I just want to mention this is a general overview of the marketplace. If you want more specific numbers on your property, maybe you have a house you're looking to sell and you want to buy a bigger one, or maybe you're downsizing, maybe you want to buy a rental property. Whatever the case may be, if you want to find out a more precise number for your property, visit our website at Reno homes.com, and you can just scroll down right here to this Find Out Now button. Click on that and give us your address, and we'll pull up a full report and give you a more specific idea on what your home would be worth in today's market. And of course, you can always reach out to us directly, 688-6060. You can see that on the screen here. Our email address is info@renohomes.com. And of course, if you'd like to visit any of our social media accounts, you can do that right there. Whether it be Instagram or Twitter or YouTube. We have a lot more videos on the market and on neighborhoods and things like that. So let's go back. Median home price at $455,000. Let's move on to interest rate. Now, if you've watched any of these updates in the past, you know that interest rates have a huge impact on prices, and it makes sense, right? Because as interest rates drop, purchasing power goes up. People can afford a lot more. You see a lot of refinance activity and so on. Now, the first chart is on the last year, and as you can see, we started out the year in January 2020, the end of 2019, at roughly 3.5 to 3.75%. So people are getting mortgages between 3.5 and 4%, which is still incredibly good. And of course, we started to see it fall a bit, and believe it or not, it started to actually pop up a bit before the pandemic in March, and then of course, government and the Fed stepped in and started doing some asset purchases, and the interest rates started to drop like a stone until now they're at record lows at 2.71. So if we go back to the 5-year, you can see actually late 2018 into early 2019, interest rates were the highest they'd been in nearly 10 years at around 5%, maybe 5.5, 5.25. People were getting 4.75. So as you can see, that would have a major impact on people's purchasing power. Now we're down to just about half of that again at 2.71. And hot off the presses, literally about an hour or two ago, the Federal Reserve came out and basically confirmed what we already knew, which is they're going to do anything possible to, quote, keep interest rates as low as possible until economic activity returns. And that's code for they're going to buy up bonds, they're going to buy assets, they're going to do whatever they have to do to keep that interest rate for mortgages and other items as low as possible. So I don't expect interest rates to move much going into next year. I do think they'll pop up a little bit maybe from where they're at, probably middle to the latter half of 2021, but expect low interest rates for the foreseeable future, which is very bullish for housing and real estate in general. Let's go and start with the number of sales over here in November. 551. That's down 11.8% from last month, from October, and it's up 21% from November 2019. And if you do number of sales by price range, these are the number of sold by price range, you can see here where most of the sales are taking place are about 300 to about 600. This is the bulk of where sales are taking place. And really it's about 300 to about 500. If you look here, about 150, 140, about 300 sales, give or take, just of that 550, right? 551, right at the 300 to 500 range. So this is where a lot of the activity is taking place. Let's move over to active inventory, and this is where the story or the plot thickens, as they say. This is really the story of the market in 2020, and that is lack of inventory. That's really what's driving price. I get a lot of people ask me, they say, are we in another bubble? We see prices rising so much. Is this going to be, 2020 or 2006, 7, 8 all over again? Are we going to see massive foreclosures and things like that? And the answer is no. That's not to say there may not be some foreclosures and things like that, given a lot of job loss due to the pandemic and so on, but it's a completely different environment. I mean, back then, it was a volume-driven surge, meaning people were buying multiple properties. You had people flipping properties left and right. You had people getting loans that had no business getting loans. The mortgage market and equity in homes and things like that is much stronger than it was 10 or 15 years ago. So I don't expect another bubble to pop. I do expect the market to slow down a little bit, more so because you're going to see more inventory start to come on the market. I think a lot of people have stayed put. You may be one of them because of the marketplace. People want to have a wait and see attitude. Obviously, the pandemic has been crazy. We had fires all throughout the summer season and smoke, and we didn't know if kids were going back to school or if they were going to be staying at home to do distance learning. We obviously had the election recently. I mean, there's been a variety of things that have happened in 2020. So a lot of people have, I think, wanted to take a wait and see attitude, see how the economy does, see how we get through all of these challenges. I think as we put those things hopefully in the rearview mirror in the first quarter to first half of 2021, I think you're going to see those people that may have been on the sidelines start to come out. We're already starting to see a lot of activity, people looking to possibly sell their home in the spring, giving us a call. We've already got some appointments set up for first part of the year. So I do expect that the prices will soften because you'll see inventory in the market. But here are the numbers. Down 22.2% number of active homes on the market from last month. So only 360 houses active on the market, and that's down 66.9% from this time last year, which had over 1,000 homes on the market. And you can see here, normally it starts out in January, peaks out somewhere in April, May, June, and then sales usually follow suit. You go down there, you see it drop, pop, and so on. Well, we started to get that little bit of a pop, but you'll see instead of coming back up here as far as inventory goes, which would then make it settle down here, everything that would have been up here as far as active inventory actually got sold through, and now we're sitting with next to no inventory on the market. Now let's look at active inventory by price range. And you can see here, the most inventory happens to be right here in the 3 to 400 range, then 4 to 5, and so on. But what I want you to take a look at here is the number of houses that are on the market in the, let's say, 600 and up range, 600 to 1.5 million or more. And if I go back to number of sales, now this is the number of sales, this is the active inventory by price, and you can see the difference there. Not a lot of sales in this upper end price range, which makes sense. There's not a lot of people that can afford $1 million plus homes, but you're starting to see more active inventory up there. So when you're talking about the higher end of the price range, it's actually a somewhat more normal market. It is still good. Things are still selling faster than normal, but it's much closer to what would be considered normal. Let's go on to the new listings. Now, these are new listings that are taken in the month, and in November there was only 375 new listings, which is crazy low. Down 34.9% over the 576 listings that were taken in October, and down 12% from last year, November 2019, which was 428. Now let's take a quick look at absorption rate. Absorption rate means nothing more than if it's basically the sell-through rate. So at the current pace of sales on a monthly basis, total number of active listings, how many months or how long would it take you to sell that inventory through? Now, in a normal market, you would expect that to be right around 3 months, between 2.5 and say 4.5 months. That's kind of considered a strong or a stable market. So as you can see, we're at 0.7. which is absurd. I mean, it's just crazy. It means we have less than a month's inventory on the market, essentially. And that's down 11.8% and that's down 72.7% from last year at 2.4. And as you can see, it's been relatively strong at about 2.5 down to, little, 1.5, 2, and it's been kind of varying back and forth. It did drop a bit back in January of 2018, and then it spiked back here at 3 to 3.3 months in middle to late 2018. And if you recall, I showed you earlier, that's when interest rates actually peaked out, was late 2018 into 19 is when interest rates were hitting high levels. And I remember we were actually sending out letters to some of our sellers and informing our people that keep an eye on, because the market was actually slowing down significantly. And as you can see, inventory dropped and then it just fell off a cliff right here late in this year. Now if we do absorption, remember I went back to the number of active homes on the market versus the total number of sales above 600,000. If we look at the absorption rate by price range, you can see actually this upper end price range is more like 1.5 to 3.5 months for the absorption rate. So it's going to take a little bit longer for a sell through. So that's it for today's market update. Just a quick reminder, if you want more information on your property, every neighborhood's going to be a little bit different. There's going to be different factors that influence your price, whether it be a 2-story or a 1, maybe you have a bigger yard or a smaller yard, it's in town, it's in a suburban area. Whatever the case may be, we're happy to take a peek at your property, do a full report on it, send it to you. There's no cost, no obligation. And of course, if you're interested in selling your home, we'll sell your home for as low as $39.95. It's 1% of $400,000. We can save you thousands of dollars in commission. If you'd like more information on that, again, visit our website, forrenohomes.com, and all of our contact information is right here on the screen. And as I mentioned before, stay tuned, because we're going to be doing a 2021 look ahead and a wrap up for 2020 here in the coming weeks. So hope all of you have a great holiday season. Thanks for joining us today, and we'll see you next time. Bye-bye.
Assist to sell way smarter.